should bond prices be going in if that's what the fight looks like? They should be going up or down. Now, in this stage, in these early stages, you could argue quite easily for this side of the book here, of course. Even at this stage here, you could still argue because we'd been on a macro journey to the downside in terms of this trend phase. So even through that phase, we argue that we could still be very definitely on the long side of bonds if we're getting a value against this wholesale. But from that point onwards, we can see that the only thing we can be doing is selling bonds. We can't go against the fight. At the end of the day, that would be suicide. And what happened in terms of bonds is very simple. The fight which is making higher highs, the bond was also testing higher highs. There's no way that's going to be sustainable. No way that's going to be sustainable. And that's going to give this big rip to the downside on bonds, which is exactly what happened to bonds. So when you see lower highs, so higher highs and higher lows, your job is to try and be short bonds. That's as simple as it gets, is try and be short bonds at key price prints. And obviously when the market sold off from that price print, it's actually very obvious that the sell was the one to be on, wasn't it? And you might say it's obvious in hindsight, always. Yeah, but that's why we do classes, because we want to look back at these and say, what did I miss in terms of the storyline that failed to resonate with me when I saw this price happening? And that's where learning comes from, isn't it? If we can recognize what it was that we missed out on, we can be specially attentive to it, and we can make sure that it's built into our systems and our processes going forward. And then we can start grabbing a bit of that attention, because this price, technically, when you look back at this price here, and you look back at this rally through that phase there, the bond dropped during that phase. That's all good up to there, but when that's still rallying, and it only really started to rally from this point here onwards, from this point here onwards, the bond should be doing the exact opposite to what that is doing there, shouldn't it? The bond should be doing the exact opposite. So when we know that the bond should be doing the exact opposite, we've got our storyline. And therefore, it's a case of trying to find a way to get back into that short bit of business, which fortunately there was opportunities to do that. Fortunately, there was an opportunity as we started to drive back up into the highs here. We started to see the volume collapsing off the trade. It was already a very, very bright light sign that we should be getting short business done into the high price here. And unfortunately, we never got the stops. We never got the wholesale top line. But my goodness, what a sell-off happened from that high print. And into the low print, of course, you've just gone for a full measure. You know that what's going to happen. You're from a full measure from the highs to the lows, and you know exactly where the price is going to stop to the, literally on this occasion, almost to the tick. So you already knew where the price was going to stop to the tick, and the price stopped literally to the tick at that point. And the takeaway from that was brutal. Very, very nice buy-side reversal from the measured move. And it was very, very, very nice reversal trade. S&P has finally broken, guys. 91s. Sell side only. Sell side business for me. Sell side only. And still looking pretty good. Target price was achieved, obviously, on the S&P. We talked about that 96 price being a target price. That was the price that was achieved. But I don't really have enough value to buy this as yet. I'm quite happy to be in the game. I think Max is keen. Max is having a little look at this down phase now that we've broken the 43 handle. So Max might well be looking for a bit of a bid watch coming up. I'll just fire that into the tweets and see if we get that.